The company behind Truth Social just reported its worst quarter ever, and crypto is the reason why. Trump Media posted a $406 million net loss in the first quarter alone, driven almost entirely by unrealized losses on Bitcoin and Kronos tokens. The company aggressively bought Bitcoin near last summer's all-time high above $100,000 per coin, and the price has since dropped roughly 20% from those levels. On top of that, a deal with Crypto.com gave Trump Media a significant stake in Kronos tokens, which have also fallen sharply since the acquisition. The combined paper losses wiped out nearly all of the company's remaining cash reserves, leaving it with very limited financial cushion. Trump Media says it still plans to hold all of its crypto positions long-term and has no immediate plans to sell any of them. But with Bitcoin hovering around $81,000, the company is now sitting on one of the largest unrealized crypto losses of any publicly traded firm this entire quarter. $71 million in Ethereum linked to a North Korean hack just got the green light to move, and the destination is surprising. A U.S. court has cleared Arbitrum's decentralized governance body to transfer the frozen funds into Aave, a leading DeFi lending protocol where they can earn yield while legal proceedings continue. The ETH has been sitting completely untouched since it was traced back to the 2022 Ronin bridge hack, one of the largest crypto heists ever carried out by North Korea's notorious Lazarus Group. Victims of the original hack and terrorism creditors still retain their full legal claim to the funds under the court's order. But the judge ruled that keeping the ETH idle was wasteful, and that earning yield on it through Aave would not prejudice anyone's eventual claim. This marks one of the first times a decentralized autonomous organization has received explicit court approval to manage frozen assets on behalf of claimants. The decision could set a meaningful precedent for how stolen crypto is handled in future legal cases. Three DeFi protocols that barely existed a year ago just paid out nearly $100 million to their token holders in a single month. Hyperliquid, EdgeX, and Pump.Fun returned a combined $96 million through buybacks and direct revenue sharing over the past 30 days. Hyperliquid led the pack with $53 million, mostly from trading fee revenue on its perpetual futures platform. EdgeX contributed $24 million, and Pump.Fun added $19 million from its Solana-based token launch platform. What makes these numbers remarkable is that none of these protocols existed in their current form 18 months ago. The numbers represent a major shift in how DeFi projects are valued. Instead of chasing transaction volume or total value locked, investors are now asking which protocols actually generate real earnings and pass them back to holders. If this trend continues, it could reshape which tokens attract serious capital in the next market cycle. Subscribe now!